Welcome back, YouTube, to another day at the House Money Investing channel. Today I'm going to be going over the 18 positions I just sold today, as well as showing you some of the principal I pulled out, and you'll also see some of the gains I made. The strategy I'm using for this challenge is basically deploying money into the market over a 30 to 90 day period. After that time, I will withdraw my principal out of the market, leaving my gains in the market, hence house money, which is, in my opinion, free stock and definitely is zero risk beyond that point. So if I put 28 grand in the market, I pull it out, let's say I make 4, 5, 6, 7, 8 grand, leave that in the market. Now I have 4 to 8 grand worth of free stock. I can let all those positions just ride out on house money and compound and build up over time with zero risk. I don't have to really worry about them going down, because like I said, it's basically free money. And doing this every 30 to 90 days, I'm steady building and adding to my portfolios. I have about 10 brokerages at the moment. I have about an estimated value of about 8 to 10 grand, and I just started this challenge back in June. Taking a look here, the first position I sold was Run, which is Sunrun. I sold this in my Fidelity account for $57.58. On this trade here, I actually did take a loss. I believe it was like a couple bucks, maybe $1.42 or so, that I took a loss on it, which is okay. It's a small loss, which on some of these, swing trading, you're gonna take a loss on some of your trades. You're not gonna win. You're not gonna profit on every single trade. You have, no matter how many technical analysts you look at, balance sheets, you're gonna have unforeseen events and stuff like that going on that can affect, those positions or those shares within that time frame. But as I go through, you'll see that on most of these I made a profit. I did come out more profitable overall, which, since I've been using the strategy, of course I've been coming out profitable overall, or else I wouldn't do the strategy at all. Next, I purchased $5.14 worth of pins, which is Pinterest. Great stock as well. And I purchased $5.14 due to me selling one share out of my Fidelity account for $71.64. So on this trade here, this was my profit of $5.14. I purchased it in my Stash account due to the fact that Stash offers fractional shares. Fidelity does offer fractional shares as well. If you do purchase not by share but by price. But the thing about Fidelity is, I purchased this by share, so I can't just sell out a dollar amount. So I had to sell the whole share, and I repurchased it in my Stash account, which of course I did repurchase it at a higher strike price than when I purchased it in my Fidelity. But again, that's okay, because that's it's basically free money, and this is a company I believe in. So purchasing at a higher share price doesn't bother me, because I know in the long term this stock is going to go up. Next, you got DFS, or Discovery Financial Services. I purchased $7.84 worth, and this was due to me selling one share out of my Fidelity account as well for $84.16. So this was my profit, $7.84 off of this one share. And this is about a 30-day play or so, if that. And you may be thinking, hey, you made $5, you made $7. Like, that's not a lot of money. That's not, what are you doing? But think about it. It adds up over times, and it's free. It's free shares. And like I said, I'm doing this every 30 to 90 days. So I'm steady building my position, steady adding to them. I have 10 different brokerages that I do this in. So I'm steady gaining free share. Then I withdrew some principal out of my Fidelity. It was $393.93. So as you can see, I'm taking out my principal, which these trades I just made in real time. That money isn't available to withdraw. As you know, it takes a couple of days, especially, you know, that it's the market just opened, well, kind of open pre-market. So once it opens, it is sell those shares, and then, you know, that balance will be available for me to withdraw. So this $393.93 is just from previous days of me withdrawing the principal. Then in my M1 Finance account, I sold $230 worth of shares. In my M1, I have 100 shares, all set at 1% each. So basically, when you set them at 1%, every time you invest, it's going to try to keep your portfolio balanced. So as you see here, when I sell out, they're all going to be at different amounts because it's trying to balance these shares out. So if one gains some and one loses some, when you sell out, the one that gained is going to sell out of that one instead of the one that lost. Try to keep them at an even balance with having the same amount of money in each share. And what I do on M1 is I put a few $1,000s into it. 30-90 days, I pull that few $1,000s out that I put in, and then also I'll have gains on, you know, several different shares. I'll also pull that out, and I'll go to another brokerage like Stash, Cash App, Robinhood, or Public, or Fidelity, and I'll purchase, you know, those shares back in those positions there. M1 does offer fractional shares, so I could do it in M1, but I like to house money trade on my M1 account, so I don't want to have, you know, several different fractional shares in M1, because eventually I'm gonna get to 100, which will stop me or block me from actually using the brokerage for the strategy that I'm deploying. And we're just gonna go through real quick and look at these dollar amounts for each, as well as, you know, just pay attention to the tickers. Just look at the quality of positions that I'm into, and, you know, you can take these tickers and do your own due diligence and look them up and invest yourself, you know. So we got Peloton, Square, Datadog, Roku, Spotify, RW, ran by Cathie Wood, which is a great ETF, TQQQ. We got Pins, Teladoc, AMD, DocuSign, PayPal. AMD does chips for smartphone for Apple phones. PayPal is dominated in that space. PayPal and Square, actually. Then you got Boeing, Snowflake, Facebook, Lending Tree, Apple, FedEx, Etsy, TQQQ, which is it's real big on tech stocks. Then you got some Charles Schwab funds as well. You got Skyworks Solutions, American Express, Alibaba, which is the Amazon of China. You got Qualcomm. Got a bunch of Vanguard funds in here as well as we got JP Morgan Chase, Whirlpool, Lulu, Domino's Pizza, Wynn Resorts, which is an awesome long-term play. This thing is going to bounce back so well, you know, after everything's back to normal around here. Then you got Broadcom, you got Garmin, you got Disney, IBB, SPA, of course. You got VU, Microsoft, T-Mobile, Berkshire Hathaway, which is ran by Warren Buffett, Goldman Sachs, Visa, Best Buy, Public Storage, McDonald's, Nike, Extra Space Storage, Splunk, T-Row, V&Q. You got Beyond Meat, which is an amazing company. It's so innovative, and they're dominating that space as well. You got Starbucks, a great dividend player. Clorox pays great dividends. You got EA, Dollar General, Costco, Honeywell, Home Depot, great dividend play. MasterCard as well. Then you got UPS. You got Kimberly & Clark, APD, Walmart, J&J, one of the greatest dividend plays you can get into. You got Toyota, Pepsi, another great dividend play. Plus, it's a growth stock. You got Caterpillar, Lowe's, McCormick. Then You got Target, Ecolab, 3M, Great Dividend Play, Abbey, Illinois Toys Work, and those are the 100 shares that I have in the M1. Like I said, every time I deploy money into them, I change those shares around. Then on my Webull account, I sold Spotify, right? I had 1 share of Spotify. My average cost was around 2 something. So I did make a profit on this one. I sold this share for $343.30. And I purchased the gains. I took them and purchased them in Robinhood. So I purchased Spotify for $81.90. So in about 30 days, this 1 share of Spotify ran up $81.90. So as you can see, they're not always, $1, $5, $10. Sometimes they're bigger gains, $80, $100. I've made gains of $400, easily within 30 to 90 days. So now I have $81.90, which is almost a quarter share of Spotify. Just riding on the house money. This is going to compound and build up over time, while at the same time I got all my principal back. Then I sold $42 worth of Qualcomm in my Cash App account. On this one, my gains were large enough that Cash App allows me to basically sell, or basically pull out my principal and leave my gains inside the app. Then we had Target. I sold it for $43.14, which on this play I made nearly $1, not quite $1, but I just rounded it up just because I did make a little profit. So I took that and purchased $1 worth of Target in my stash account. Then we got Microsoft. Sold Microsoft and Cash App for $43.61. On this one, I did take a loss for about 40 cents, 30 cents or so. It was a very small loss. Of course, I'm trying to swing trade Microsoft. Everybody wants some Microsoft, right? So I try to swing trade Microsoft and add to add to the fractionals that I already have in my other brokerages, basically. They got AMT, American Tower, Great Dividend Play. So I got paid dividends as I held this. I did take a loss on it. It didn't gain any money. I lost a couple bucks, maybe $1.64 or so. So a small loss on that one. Then you got Facebook. Sold Facebook out of my Cash App account for $46.36. This one I made almost $1 profit. So I went ahead and purchased $1 of Facebook in my public account to add to my position that I currently already have. Then I withdrew some principal out of my Cash App for $119.26. Then here in my Acorns, I withdrew some principal as well for $106. As you can see, my balance on my Acorn account is $1,400. And I deployed out of this bank I have here, I deployed 28 grand into the market. So as you can see, I'm almost recovered all of my principal, and I still have the rest of this month to withdraw funds. So that's another 20 days worth of principal that I will accumulate. So I will get that 28 grand back, and I will also keep all these gains I've made in the market. And this is strictly what this bank account is for. It's just for this house money strategy that I came up with, that I started in June. And Acorn, I kind of do similar to M1. With Acorn, I just deploy a couple grand, and then 30 to 60, 90 days I pull out my principal, and whatever I gain, I leave that in Acorn app. Then here in my public account, I sold NUGT, which is a play on precious metals. If you know anything about gold, it's kind of been beaten down here lately. It ran up so high, then it had a pull down due to the the vaccine news and stuff like that coming out. So of course the value is going to drop down, as well as Bitcoin, just because if the economy gets it back on track, these precious metals and other currencies and stuff will be devalued a little bit. When the dollar's struggling, of course, these other currencies and precious metals and stuff, they're going to rise in value. You know what I mean? So I did sell this at a loss. I lost a few bucks, which is okay. And I'm always trying to, swing trade gold. I do swing trade gold ETFs and other positions like that. And I also accumulate. I purchase physical gold as well. If you look at the history of gold, it's always running up. So it's always a smart play to, keep some gold in your portfolio, as well as keeping some physical gold. This is another gold ETF that I sold for $49.31. I took a small loss on this as well. This is a bull times 2 share, so basically it goes up twice as high. On the bullish side. So that was just a little 2 plays I had, trying to get some more gold exposure in my brokerages, but of course it didn't work out because the timing wasn't right. Then I purchased $1.96 worth of Triple Q, which is a tech heavy fund. Purchased this in my Robinhood. That was due to me selling my PowerShares Triple Q out of my public account for $52.97. My initial investment was about $51. So on public, when you withdraw your principal, if your gains aren't large enough, then it will make you sell everything altogether. So that's what it did, and I just repurchased it in Robinhood for $1.96. Then I purchased $1.59 worth of SPY, which is basically the S&P 500 fund. And I had a Spider S&P 500 ETF. This is what I sold for $53.61. And my profits off of that were, $1.59. So my initial investment was around $52, which is only like maybe not even a quarter, maybe 12%, 10% of a share, because those shares are about 2 something, I believe. So I did make a little bit of profit, which I added to my Robinhood portfolio. Then I sold Zoom for $48.13. This one I lost the most amount of money on today. It's about $4 or $5. Zoom has really been beaten down. When I got into this swing trade, I was thinking, this is a guarantee, which is this is what happens sometimes. You'll think something is a guaranteed, because I'm so used to making so much money off of Zoom, right? Because since March, it's just boom. I mean, a lot of people are using Zoom, using it at work. A lot of colleges are using it. Everyday people are using it. But of course, with the economy kind of trying to get back to where it's going, and the vaccine news and stuff like that, of course, people are selling off because they think it's going to be devalued. In my personal opinion, I do think Zoom will still hold its value, and I still do think the platform will be used as well. But I did take a small loss on that one as well. Then I had Trade Desk. This one I made a nice hefty profit on. Sold it out of my public account. I invested $54. I took the $54 out. The profits were large enough that public just held those gains for me. So Trade Desk did very well. Then I had Shopify, which you saw. I sold Shopify, made an $80 profit out of my Webull account. That was a whole share. This one here wasn't a whole share. It was about a quarter of a share. So I made about a quarter of $80 basically. So the profits weren't as large, but it was a nice return. So I sold $55 in Shopify. The profit stayed in my public account. So as you can see, that's like I had some fractionals in my public, and I had some fractionals in my Robinhood, both of the same stock, right? Because Shopify is one of the best long-term plays you can get into, in my opinion. It's going to be up there with Facebook, and Facebook is arguably, one of the best, or will be one of the best companies in the world. And Shopify, in my opinion, is right up there with them. So of course I doubled down on Shopify, and as you can see, it worked out. Made about $100 worth of Shopify. Then out of my public account, I pulled out some principal. It was $290.28. And then on my Robinhood, I pulled out some principal as well. It was $283.45. And then out of my Ameritrade account, I pulled out some principal. It was $617.08. And then in my Robinhood account, I purchased $1.16 worth of AMJ. That was due to me selling AMJ out of Moomoo. I had one share of AMJ in my Moomoo account, and of course Moomoo doesn't offer fractional shares, so I sell the share, the profits of $1.16. I purchased in Robinhood, right? Then I had home in my Moomoo account. I sold one share for $15.73. I did take a small loss on home. Home was another stock that I got into, or at home, right? And it's been really beaten down. I don't know why Wall Street is just sleeping on this stock, and a lot of people are going to regret it. I got some big gains, and I've been swinging trading home, so I have a bunch of house money or free shares of home, and they're up so big. And this is one that I'm always swing trading. I'm steady adding to, especially at the current price. And just looking at the fundamentals of the company, everything looks great. They're making profit hand over fist. Their long-term debt is little or none, and they just have a lot of cash balance. And their business model is set up, for success. So this is another stock that you can look into, and this is one I'm steady adding, because like I said, this one's going to run up, and when it does, I'm going to be on the wave. And then from my Moomoo account, I withdrew some more principal, which is $574.81. So just a brief estimate of the principal I got was like, we'll call that $500-600. We'll call that $1,200 altogether. $1,300, $1,500. Let's see what else we got here. We got another one. Yeah, $1,600, $1,700. Plus I have two more. Another $400, so that's like $2,100 basically a principal I withdrew today. And then we'll go here. So that was 21 plus 3 here and 2 here, so it's about $2,600 worth of principal that I got out of the market just in one day today. But this is my Charles Schwab account. As you can see here, I withdrew $315.07 of principal. And then out of my Vanguard account, I withdrew principal of $190.20. And that'll be the video for today. Those were the 18 positions I sold out of. As you can see, I pulled out quite a bit of principal. I made some nice gains. I did take some small losses, but overall, I was profitable at the same time as getting all my money back that I put into the market. Now, you can look at the ticker and the positions I have. You can buy as much as you want, or as little as you want. You don't have to necessarily use the strategy that I'm using, to be able to make money off the plays that I make. Or you can use the strategy I'm using. You can do it a lot less money. You can do it a lot more money. That's up to you. I do have long-term accounts as well as dividend accounts. I do have those private accounts. I have some in Robinhood as well as Fidelity, but I do not display those. Accounts on this channel due to the fact that this is just a House Money Challenge channel, just to show people, that you can turn, small money into large money over time, and there's ways to kind of gamble risk-free or a low risk, because a lot of people are scared of stocks. They don't really understand them, and I'm just giving people, showing people, that it's possible. And basically at this point, I'm just displaying the tickers that I'm into, so people can look them up and find out if there's something they want to invest in. Later on down the road, I will be breaking down balance sheets and technicals of these companies, and kind of teaching or coaching onto you know, how to look for a good company, what makes a good company, all that good stuff. At this point, I'm just doing my daily moves, like as you see here, stuff throughout the day that I'm looking at, some quick stock picks and stuff like that, as well as some gains. And then I'm breaking down or going through some of my brokerage accounts that I have. I've been through Robinhood, Stash, Acorn, and Webull. My next video I will do will consist of my Cash App. So I'll go through my Cash App account, you know, show my balance, my gains, show you all my positions, the one I'm up in, the ones I'm down in. I'll let you know how much house money I have in this account and stuff like that. So if you like the video, go ahead and hit the thumbs up for me. I would appreciate it. If you thought it was trash, you know, hit the thumbs down. I'll appreciate that too. You can leave any comments, have any questions. If you have a different outlook or a different kind of opinion, you can leave that in the comment section below as well. And then if you want to follow my journey, you know, subscribe, hit the bell. Like I said, I post 1 to 3 times a day, and this is 7 days a week, and the content will be a wide variety range of different things that I'll go through on my channel. And I'll make a video tomorrow dropping basically what I did in the market throughout the day, and this will be the end of this video.